This week's retail earnings shook out with some winners, but also a few losers. Retailers like Abercrombie, Dick's, and Foot Locker beating expectations, while Kohl's, Best Buy, and American Eagle missed on revenue. And this morning, you've got shares of Gap and Ulta that are higher. In fact, Gap shares up by 23%. Costco and Nordstrom are falling. Joining us right now is Dana Telsey. She's Telsey Advisory Group CEO. And Dana, this is a really weird retail season. You see winners who are up 10, 20, even more percent. Abercrombie and Fitch up 24%. You see losers get punished by equal amounts to the downside. What's happening? Like, normally you see some hits and misses, but not nearly the stock reaction that we're getting this time.
It is amazing, Becky. The stock reactions of companies going up 20% plus, or then on the downside, like Kohl's yesterday, down nearly 25%. It's been all over the place. Think of the journey we've been on. We've had in December, when Powell said that rates were going to be cut, consumers, an early cycle group, they took off. They're up over 20%, many of the names. And we had a year-end, year-over-year increase for many of the consumer names that you wouldn't have known from January through November that this is what happened. And then all of a sudden, inflation, you have the interest rates not being cut at the time frame that everyone expected. And we had a very cool Easter season where you didn't really have any uptick. So the expectation was that sales were going to be weaker, and you would have earnings guidance reset, because Q2 is never a big quarter for retail. It's an expense quarter, not a sales quarter. All of a sudden, some of these retailers come in. What do you see? You see newness in the product be able to drive sales increases that were better than expected. And the exit rate of the quarter of sales is better than expected. So like you said, Abercrombie, look what they did. You have newness in Hollister. You've got a wedding shop in Abercrombie. Look at Birkenstock yesterday. Very strong with full price sell-through. And then you had some of the losers basically going up against clearance last year, impacted Kohl's. You take a look at Nordstrom, where the full-line stores are still flat. It is innovation and newness. You have to give the consumer something that they don't have, because my word for the consumer these days, they're squishy. And they're very discerning about what they will or won't buy, even the middle to upper income consumer.
See, I would say the same thing. We like to make this sound simplistic, that lower end consumers aren't spending, higher end consumers are. I think this is a situation where for a long time you had such a strong consumer, it was covering up flaws at some of these companies. And now you're getting a chance to see who the really good operators are, who's made a good point of making sure they're lean, who's got things that are actually luring shoppers back into the stores. Mary Dillon was here yesterday from Foot Locker, and she said not only did they see their numbers improve every month sequentially during the quarter, January, February, March, they were able to do that while they were taking down sales. So people were coming in regardless. Then you hear from Kohl's that, we couldn't sell the clothes or the shoes. So it seems like there are the haves and the have-nots, and that comes down to operations.
Oh, 100%. It comes down to operations. What are they putting in the store? You take a look at some of the new things that Mary Dillon is doing, and frankly, some of the new brands that she has. It's differentiated for her core male consumer that's around 18 to 25 years old. And yes, Nike's going to have new product as we head into calendar 2025, which will be a help for everyone.
So how do you figure out where people should be buying? Which stocks are the ones that are worthwhile? Which ones aren't?
I want to look at the names overall where you are getting some sales growth, where they're investing in their store base, where loyalty members are increasing. I like Ulta. I think that's still going to be a winner as we go through the year, as they level set expectations. I think Ralph Lauren, where they're continuing to see AUR increases up nearly 13% in their average unit retail selling price, and it's selling through to a wider audience that they've seen more than they've seen in the past. I think of that as encouraging. I think of other names out there that have improved. Look at Urban Outfitters. It's now even the Urban Outfitters division is beginning to show some signs of improvement. I think there's a case to be made for specialty apparel is improving more than we've seen in the past because of this fact of what you said. It's operations and merchandising that's driving demand. And yes, you look at what Gap did. The Gap brand is becoming more relevant. They still have work to do on Old Navy to improve it, but showing increases across the board. We haven't seen Gap do that in years. And let's not forget Deckers, too. Hoka matters.